Thank you so much for joining us on the Dwelling Show. I'm your host, Ola Dantes. I've got the amazing, incredible Chris Larsen with us today. Hey, Chris, how you doing?
Well, I'm great to be here with you today.
Yeah, awesome. No, Chris, you've got a remarkable story. I cannot wait to dig in with you today. But why don't we just start with kind of telling us who you are, what you've been doing, and kind of what you're doing lately?
Yeah, so we can go back pretty far when it comes to real estate. I bought my first property when I was 21 years old and built up a single family portfolio that, as of 7 years ago, started to transition in the multifamily space. Um, kind of along the way, I was in college when I was doing that. You and I were talking before the show. Went to Virginia Tech, and my big passion at the time was racing bicycles. So my whole goal, I was in the engineering program at Virginia Tech. My whole goal was to become a professional cyclist, not a professional engineer. And on that path, my best friend, who was also my roommate, my training partner, he passed away between my freshman and sophomore years of college. And that was, I talk about this in my book. It was a real period in my life that caused me to step back and reflect on what was important. And even though I continued to race another year, it was a real therapy for me to kind of pour my heart and soul into the sport. But I realized after a year racing, full force and having a lot of success, it didn't make me happy. And I'll never forget the point. I won this race that was actually my friend Chris Strader's memorial race. So it was a little bit more than a year after he passed away in September, around Labor Day. And I won the race, and I came across the line and I had my hands up and I felt nothing. I mean, I wasn't sad. I wasn't happy. I just felt hollow. And a week later, I was in a race and I just quit. I pulled over on the side of the road. My mom was there and she's like, "You don't quit races." And I was like, "Yeah, I'm done." And she didn't realize that I was saying I'm done, like, with racing. So I went back to school. I had started investing in the stock market, Ola. So I was day trading. I was doing really well, but day trading is very, very cyclical and volatile at times. And I was looking at other investment options, and I was reading just book after book. I read about 250 books on investing, finance, real estate, stocks, all the stuff. Ended up getting an M.B.A. in portfolio management and finance. And along the way, I bought my first investment property at age 21. And what I liked about real estate is that there was some control that you had over it, and you had leverage, and it was something that was very, very easy for me to understand, also very stable. So that was the direction I decided to go. So I became a real estate investor at 21. I didn't have a lot of money. My first property, I put less than $3,000 down, had my mom co-sign on the loan. And I was like, I need to make some money. So I started looking at careers that would give me capital to invest. And I became a medical device sales professional. So I started along that path. By the time I was 30, I was accredited and I was looking at different investments. And just a few years after that, started to invest in the multifamily space. So what we've done after syndicating deals since 2016, I founded Next Level Income 2 years ago because there were so many people that I came in touch with, and they wanted to know, like, how I did it. Like, how do you get to that point to become an investor? How do you get to the point to become financially independent? So we founded Next Level Income 2 years ago with the intent of helping investors become financially independent through both education and investment opportunities. We had our book published earlier this year. And if you're listening and you want to learn a little bit more about my background or the strategy that we use, which I know is very similar to yours, Ola, you can get our book at our website, nextlevelincome.com, and just go to the book link. I'm happy to send your listeners a free copy.
Oh, really, really appreciate that, Chris. Yeah, definitely. So yeah, there's a lot going in there. I was just taking notes as you were talking. So yeah, so sorry to hear about your losses, and yeah, I can relate. Lost my mom last year, so yeah, definitely can relate to that. One thing I was gonna ask you, one thing I was gonna ask you also is, so you started at 21 years old, right? There are some folks who listen to this show who are in their 20s, right? And they're thinking, oh my goodness, I want to start in my 20s. I mean, if I started in my 20s, I know exactly where I would be. Or my early 20s, should I say? I started in my late 20s. But yeah, so what would you say to that person?
You look like you look good, man. You look like you're still in your 20s. So
I wish. Yeah. What would you say to that person, thinking, I want to start in my 20s? What can they do? How can they get started?
That's a great question. And, first off, I'd say don't go do it all yourself. I'd say the best thing that you can do is find somebody that has achieved the success or the results that you want and reach out to that person. Find a mentor, find somebody that can help you develop that path that's more efficient. And I mean, I've had coaches, I've gone to different trainings and programs. I spent a significant amount of money every year for a long time on that. And it's funny, even the worst things that I've been to, the worst events I've been to, I've always gotten something out. Actually, my first connection in the multifamily space came from probably what I would call the worst investment I made in a training program. It wasn't even real estate related, but I look back and I'm like, I would not do that again. And I thought, wait a minute, actually, I may have not been invested in multifamily had I not done that. So yeah, if you're young and you're listening and you're like, man, I'd like to get started. Find somebody who's done what you want to do. Reach out to them. And then the second thing I would do is look in the mirror and ask yourself what you really enjoy. So personally, my stepfather, I grew up working with him. He's a contractor. I've shoveled shingles. I've swung a hammer. I've laid wood flooring. I've dug ditches. I've done landscaping. I mean, it's good, honest work. But after doing that for many years as a teenager for no compensation, I know that at this point in my life, I'd rather make some money and pay somebody else to do that who's better at it than I am. So, I know I have investors that really enjoy working on their own properties. So look in the mirror and ask yourself, if you enjoy talking to investors, then maybe putting together syndications is a good fit. If you enjoy fixing up homes, then maybe doing fix and flips is a good fit. So find somebody that's doing what you want to do and look in the mirror, ask yourself what you're good at and what you enjoy, and then mend the two together. Don't try to fit a square peg in a round hole.
Yeah, you definitely appreciate that. You definitely said something I didn't want to just gloss over. You read 250 books. Wow. I mean, how do you do that? I'm an avid reader. I've got books everywhere. I read a ton. I wanted to sign up for a fast reading, or what is it? Fast reading. Yeah.
Speed reading. Yeah.
Speed reading. Sorry. Speed reading. Yeah. Right. Tony Robinson talks about that a lot. I mean, how do you read 250 books?
Yep. Make the first book you read on speed reading. And that's actually one of the first books I read. Became more efficient. So I doubled my reading speed. And then, really it's a question of discipline, right? And choices. So, if you get good at something, and then you set aside time to do that, it's just like training for a bike race, right? You learn how to train. So you say, okay, what's going to make me most effective? I got my training schedule right here on the wall next to me. And then the second thing you do is you dedicate time to it. So when I was racing, I'd get up at 5 a.m. and I'd hop on my trainer for an hour in the dark in my basement, almost every day. When I stopped racing and I decided I wanted to build, the next level income company, I get up at 5 and I'd spend 60, 90 minutes every day working on that. Same thing. You want to read 250 books, do a speed reading course, get up and read for, I'd say 30 to 90 minutes every day. And you can, if you're efficient, you can easily read a book a week if you dedicate that time and do that. Or if you don't like to read, if you travel a lot, download audiobooks and then work on increasing the speed that you listen to them till you can get to the point where it's 1.5 or maybe 2x of speed. I find about 1.5 is a sweet spot for me because I can do a workout or I can drive in the car and still process the information. At 2x, I can have to kind of like sit in a chair and focus 100%. But maybe other people can do better than I do with that. I don't know.
Wow. Yeah, you said something as well. That's just amazing information. I have to go get a speed reading book or maybe take that course I've got on my bookmark. But you said something really important that I want to really touch on, right? In our world of like superficiality and we're not granular a lot, right? Especially our generation, millennials, right? Social media and that kind of. You mentioned that you woke up at 5 a.m. and I'm reading a book. Oh yes, this is not really showing, is it? But it's basically called the 5 a.m.
Club. Yeah.
Right? Oh, so you've read that book, obviously. So how has
I
that?
haven't read it, but I know it. Yeah.
But you know it. Okay, okay. How has that helped you though? Kind of getting up before daybreak and practicing and because I feel like discipline and self confidence are just kind of those two things you need as well for success. What has that? How has that helped you? I just want to touch on that.
Yeah, it's helped a tremendous amount. I mean, I was doing it kind of out of necessity because, working in the medical device industry, you typically have to be in the hospital, sometimes as early as 6 a.m. So, if you got to be in the hospital, say 7 or 7:30, getting up at 5 and riding for an hour, on my trainer, that was a necessity just to be able to consistently get in some hours and train and be able to perform. After I quit, I read a book, and actually you can get it for free. Craig Ballantyne, who was one of our first podcast guest on our podcast, the Next Level Income Show, he talks about the perfect day formula. And I would encourage all your listeners to go and check that out. If you, I don't know the website off the top of my head, but I can get it to you. It may even be like perfectdayformula.com, but it's Craig Ballantyne. He was on our first podcast on our website, and there's a link on that book on there. But he talks about really organizing your week. And here's the cool thing, Ola. He doesn't say, hey, organize the time that you're going to go and read the books, or the time you're going to train or do that. He says the first thing you do is you schedule family time or personal time. And that was really powerful for me. And it was also empowering because you say, okay, I'm going to have a date night with my wife, or your significant other, whoever that might be. I'm going to take my children to practice, on these nights. We have a dedicated family night every Friday. If somebody says, hey, do you want to hang out? We say, sorry, we already have plans. Our plans are we have pizza with the family, and we usually watch a movie. Every once in a while we'll go out, but we usually are at home and do that. And those are really sacred, important times. And then the second thing he suggests is dedicate time each day for the most important thing that you do. And for some people, that may be training for an event. For other people, that may be working on or starting a business. For other people, it may be self-enrichment or self-improvement through education or reading. And I think that, really, if you combine a time formula where you set aside that time with an effective strategy to do what you're doing, whether it's training or education, that's a formula for success. And I think everybody can pull that time out of their schedule. Sometimes you have to do things like I did. I quit. Like I turned cable off and stopped watching the news. I stopped reading, kind of toxic websites and social media. I think everybody could probably clean an hour up out of their day and find something for what's really, really important in your life.
Yeah, I mean, I love this. You're a multifamily guy, but I think it's really important to understand how people become really exceptional at what they do and really good at what they do. So I mean, yeah, we can talk about technicals all day long, but really, how do you do these things is what I'm really curious about.
Yeah.
So you have an MBA in finance, you've read a ton of books, so you have a lot of intel, a lot of knowledge. You were day trading, but now you're into multifamily real estate. How did that happen? I mean, you know all this other information. Why did you choose multifamily investing? I'm curious.
Yeah, well, you know the reasons, all because you do it, and
I do.
this is why I call it the Holy Grail in my book. So, when I was you're day trading, and I'll be very clear. There are ways to earn higher returns than you get in multifamily. Like, without a doubt, you can get 20%, 50%, 100% returns. But typically, if you do that, it's either really active business, you're building your own business, or it's risky in a lot of these different investments. So for me, going through an MBA, learning about different things, I learned about things like the Sharpe ratio that I talk about in my book. And what the Sharpe ratio is, it's a measure of risk adjusted return. So for those that are listening, if you're like, well, I don't have an MBA in finance, how do I understand this? It's just basically a measure of volatility. So if somebody said to you, there's a 50% chance that you can get a 20% return, but you might get 40, you might get, negative number, and you look at that and you say, okay, do I want that high high chance of return, or do I want something more predictable? In something like multifamily that has a lower return, you have a narrower band. So you might say, well, you might get a 5% return, you might get a 20% return, but it's going to be more predictable. And as I researched different investment options, the other thing I learned was the more predictable the return, not only is it safer, but your total returns over time tend to become higher, because if you think about it, if you lose 50% of your money in a stock market drop, you have to make 100% back to get back to zero. So when the stock market dropped 30% this year and rebounded 40%, you're just right almost back to even. And people don't always think about that. So, if you get into investment, it's very volatile and you lose a large amount. You have to make up some significant returns over time if you catch it on the wrong side. So for me, I call multifamily the Holy Grail because I stole that term from Ray Dalio, who is, by a lot of accounts and a lot of measures, more successful than Warren Buffett. He manages Bridgewater Capital, biggest hedge fund in the world. And he says, if you can increase return and decrease risk, that's the Holy Grail of investing. And what I found was, if you blend multifamily, I say, real estate, but specifically multifamily real estate has a lot of these attributes into your portfolio, you get increased return and decreased risks. And so for me, when I learned that, along with the cash flow aspects, the appreciation, and really the tax benefits on the back end, all things I dive really deep into in my book. I know you have a very deep understanding of all these things, Ola. It's a no-brainer for me, but it took me a couple years to get to that point.
Yeah, definitely. So, I mean, you have kind of a different perspective when you're looking at multifamily deals here in Houston, Texas, and Texas market. There's still a big disparity between, I'm talking, July 2020, right? For the record, there's a big disparity between what sellers are asking for and what we buyers are looking to pay. So when you're looking at these deals, what are the metrics that you're looking for, and how are you evaluating this investments?
Yeah, we're seeing the same thing up here in the Carolinas. And actually, my first property that I was a limited partner and a passive investor in was in Houston, so I know that market pretty well. I've been down there and checked out some different things. We're seeing the same thing, Ola. We're seeing that sellers say, "Hey, my property's worth what it was back before COVID," and we're saying, "Well, that's not really the case." And there's a gap between what we're willing to pay for these properties and what sellers are willing to let go. So we're sticking to the fundamentals. I mean, our model is we like to invest in large and growing cities that have a nice diverse economic base, like Houston. That's not one of our target markets currently, but it's a market that fits the model very well. So you have a city that's large, it's growing faster than the national average. You have oil and gas, you have medical, you have universities down there, you have other industries that have come in over the last decade. Cities like Atlanta, Charlotte, Raleigh, Greenville, South Carolina, Jacksonville, Florida, these all fit the same profile of those. We are targeting properties that are B to A. So we like value add deals still, maybe a little bit lighter on the value add side. We're looking for properties that are stable during kind of tough economic periods. So I mean, anybody can go and pull up articles and see that multifamily, if you go back to the last recession, and even right now, it's performing as well as any asset class. Maybe industrial is doing a little bit better right now, just because of the uptick in home deliveries and that sort of thing as people do this. But I was talking to an investor yesterday, and he was articulating the reasons that he wanted to invest. And what he said, and I think this really boils it down to one sentence: people always need a place to live. And right now, you struggle, you lose your job, or maybe you're working less hours, you still need a place to live. If you've had to dip into savings, you might have to wait to buy a house. I think people that can buy a house, they either have or they are buying one right now. So even though it's going to be a challenging year, it's probably not going to be the best year in the last decade for multifamily. I think the fundamentals, not only are they going to persist, but they may even be stronger over the next few years to make up for some of the pullback we've had this year.
Awesome. Well, yeah, before we kind of, talk about your book and jump into that, I just kind of wanted to go with a case study, maybe a deal
Yeah.
that you were a passive investor in, or maybe one of your deals, a multifamily deal. Just kind of give us a case study. How did you guys find it? How did you fund it? How is it doing? Or if you exited the deal already?
Yeah, so let's talk about a deal we did last year. So this was a deal in the Research Triangle of North Carolina. So Raleigh market of North Carolina. We started targeting deals, like I said, that were a little bit newer. So this property was built in 2003, 272 unit deal, almost $50 million deal, and we started targeting these markets because we wanted properties that were a little bit higher cash flow. This property requires about $5,000 per unit to bring it up to market. So rents in that property were about $1,000 a month. Market rents in that property were about $1,250 a month. So a nice, gap between market rents and where we were coming in. So I'll give you some positives and negatives. So I'll start with the positives. So this year, collections in that property have averaged over 96%. So about 98%. So even during COVID, the challenge has been with the value add side. We've gone in, we've been improving a lot of those units, and it's been challenging during Q2 specifically. So we're talking in July of 2020, but over Q2, some of those units that we were in there turning over, it was hard to get them re-rented quickly because people just weren't coming and touring their properties. So the plus on that property is our plan is working very well. We are rehabbing the units on target or even faster. Collections are high, but because of COVID, it's kind of slowed down our ability to bring those in. So occupancy has slowed down a little bit. It's dropped a little bit from what we would prefer by a few percentage points. It's still doing well. Now the flip side is we have high collections, and as people start looking at properties again, we're going to have nice new renovated apartments. There's a lot of outdoor space with that. So people are going to have the ability to to roam around. There's some balconies. So if you look at some features that people want, they want more space inside the units. We have 3-bedroom units on that property. We have garages. We have outdoor balconies. So all those things are going to be positives going forward, even though we've kind of had, one, maybe a couple quarters that are a little bit more challenging in that property. And I think, that illustrates another point, Ola, is as much as I believe in the space, this isn't a risk-free investment, right? Things happen, things go wrong. And you may say, hey, yeah, we're gonna make this return, but things may slow down a little bit, and you might not make exactly the return that you expect. But again, that doesn't change, in my opinion, what the long-term prospects for this property are. We're in year one of a 5-year plan. I think we're still going to get to our 5-year target very nicely on this property.
Yeah, no, awesome. Thank you so much for sharing that. And obviously, I can keep talking to you, but we're definitely dwelling into the quick rounds. These are going to be quick questions, quick answers. You ready, sir?
Let's do it.
All right. First question: what differentiates you from? What's the unique factor that separates you from the next guy or the next girl?
Yes, I've done a lot of different aspects of real estate, from single family to private lending, to development, before I got into multifamily. So if you're out there and somebody's interested in investing, I think I can relate to a lot of different people that have done that. I started with very little money of my own. And, I think if somebody, looks at me versus other people, I was a professional that was an investor that got into this space before I became active.
Second question. I mean, I think we've kind of touched on this a little bit. What was the last book that you read, and what was the one thing that you picked up from that book?
Yeah, so I'm reading a different book now, but the last one I finished was Lifespan by a gentleman named David Sinclair. And what I picked up was that aging is a disease, not something that is inevitable. And what he talks about in that book is the ability for humans to live potentially into their mid hundreds, like 150 years old. And I think if you think, hey, I'm going to live to 80 or 90 years old, that's terrific. But what if I told you you're going to live to 120 or 150? How would you live your life differently? So I encourage everybody to think about, if you were healthy and didn't have to get old, how old would you want to live till? And if you were able to live that long, how would you live your life differently? And what kind of impact could you make in the world?
Fascinating. I have to check that out. Yeah, fascinating. Final question. You've obviously got your book. We're going to talk about in a bit. You've got your show. You've got your investments. You're doing all this cool stuff. What do you do for fun?
This is fun. No, I think it's, as I said, I think, the most important thing that people can do aside from finding a mentor or a coach that can help them get where they want to be is having, some self-awareness and introspection. So if you choose a path that you enjoy, that's a compliment, that gives you energy, it all becomes fun. I just got back from a trip mountain biking with a good friend of mine, a business associate in Montana, and we were riding bikes. We were going out to dinners. We had cocktails out on this out deck, looking at the mountains, and we also talked a lot about business and different ideas and things that we were doing. And what I can tell you is, it was all fun because I was with people that I love and that I enjoy being with, and it gives me energy to do that. So yeah, I mean, I love being with my family, Ola. I have fun with my family. I have fun riding my bike. I have fun, looking at deals. I have fun being on shows like this with wonderful people like yourself.
Oh, thank you for that. Yeah, no, I really, really can relate to a lot of what you said. Yeah, so your book, Next Level Income. Yeah, how can people get the book? Yeah, I love it. Tell us a little bit more about the book and how can folks get it?
Yeah. So if you've been listening and you heard a little bit about my story, the book goes deeper into my story, some of the challenges I've faced in my life, and ultimately, why and how I ended up investing in the multifamily space. And really, it all comes down to freedom, and that's our mission. Ola is to empower people through education and opportunities to become financially independent. If you want to learn a little bit more about that and kind of dive deeper into some of the things that we talked about, our website, nextlevelincome.com, has our podcast, our blog, all free, tons of education on there. Would love to get you on our podcast at some point, Ola, and get you up there too. And then you can also go to the book link. People can get a free download of the ebook. And if you put your address in, I'll even send you a hard copy as well. We're doing a free giveaway through the end of the year.
Oh, wow. Thank you so much. Really appreciate that. Yeah, we'll get the links and put that in the show notes for our listeners. So I'm sure, I don't know if you've said it too, where's the best place people can connect with you, get to know you more? How can we reach out?
Absolutely. Nextlevelincome.com.
Chris, you're a legend. Loved our conversation. I really learned a ton myself. Thank you, thank you, thank you.
Oh, it's been a pleasure, Ola. Like I said, it's been fun. Love doing stuff, and you provide so much value to your audience. I love what you're doing with the One House Pledge, all that you do to give back to the community. I wish you and your listeners all the success out there.
Thank you so much, Chris. Appreciate it.